You guys are my VC Lab alumni. Radhika, you are an 8X founder. Jorden, you are 3X founder. Both of you guys helped scale startups all the way to over billions in value and also worked with global 2000 companies. And now you guys have a VC fund together for quite a while. Radhika and Jorden, welcome to the pod.
Thanks a lot, Mo. Happy to be here.
Talk about you guys really looking back, right? Like maybe even going all the way back to your childhood when you kind of connect the dots. Like, what are the life experiences and like the career roles that have made you guys become the VC you are right now at StarChain Ventures?
When I was younger, I really wanted to be a scientist, right? So I think that was pretty important. And there were a lot of different things that, because I wanted to be a scientist, that I started to do. And so I wanted to learn critical thinking and I wanted to learn about, how to explore the world. And something that was important for me was really being very knowledgeable and accurate about the world around me. And my parents were very supportive and I ended up getting into some very advanced programs and then ended up going to Caltech, which is probably one of the most advanced programs. And I studied astrophysics. So when you are in a very advanced program where you're learning about advanced mathematics, advanced science, they said, we don't, really care if you remember anything from your experience here at Caltech. The problem sets, the specific equations, those really aren't important. What we're teaching you how to do is how to think and how to be critically aware of everything around you and to use a scientific approach to how you look at the world around you and really, understand what it takes to be a world-class scientist. So those were very important experiences for me. And you really learn to break everything down to first principles, right? You start thinking about the world around you. And if something isn't working, you kind of get into this problem solving mode. And so that really sets you up for being like a technical founder, right? And building companies. And so there were certain things that were going on in the early internet. I have a background that's multilingual, and the team that I was with was multilingual, and we were thinking, hey, wouldn't it be cool if the web was multilingual at that time, that there were, websites and, different approaches. And we kind of broke it down to, okay, well, what would you need to have? And in that process, we realized that in addition to like a process flow, we would need AI. And so we actually were one of the first to apply AI to making multilingual websites and working with large companies. And the interesting thing is after my first company was acquired, the company that acquired all the work that we did, that included both algorithms as well as data, like language pairs and just a lot of language sets. A lot of that core work has actually gone into making the current generation of LLMs multilingual. And so, there's kind of this path of seeing a problem, coming up with a solution, applying all the latest technologies, growing the company to over 100 million in valuation, exiting, and then going back and creating, like you said, more companies. So you get this point of view that a lot of things are solvable if you have a good team, you have the latest technology, and you really break everything down to first principles. And then, we decided to build a venture lab and had some successes there, which you talked about in terms of, and Radhika can talk about this, maybe to some extent. And then, we then said, okay, well, that was good. We had some successes there. Can we scale it? And that's when we decided to launch our fund. We've been working on that for the last year. But if you really look at the last 7 years, it was all kind of led up to, building a VC fund. All of these things for me are very interconnected. Radhika has a very different story, but it'd be great to hear, her thoughts as well.
Some similarities at the end points, if you will, and kind of a beginning of the new chapter, but really remarkably different backgrounds as well. I mean, my beginnings are actually at Bryn Mawr College, which is a very prestigious women's university. Came here to the United States as an immigrant on a full scholarship. That environment, which at the time, when I entered the United States, I thought I was going to become a doctor. I thought I was going to become a physician. And as many Asian families, there's two things you can think about, either becoming an engineer or a doctor, and those are usually the two choices. Along the way during my time there, I realized that the clinical side was really not something that was meant for me. I just thought, I think I need to do something else. I ended up going to business school for my master's, did an MBA out on the West Coast in California, and ended up in semiconductors. And I often go back to that point in time because what I was doing was I was a member of the strategic planning division of a chip manufacturer company in Southern California. And I was supporting the telecom products division, which was all about local area networks and wide area networks. And I remember always that point in time when you're working on foundational technology of any kind, and you look at the opportunity to scale that technology decades into the future, something that's really going to transform people's lives in every single way possible. That was an exciting moment that I go back to. And so for me, fast forward, look down the way, about 2012 is when I got re-engaged into my passion sector, which was healthcare all along. And I said health in tech and health tech in general was something that I gravitated to because I thought this was always my passion sector. I didn't end up in medicine. However, I ended up in technology and ended up in foundational technologies. And then to look at how these transform the world in healthcare, for example, or life sciences, these are things that I'm still passionate about. And it's really come full circle. For me, my particular lens has always been about systems thinking. When you think about any industry, any sector, what I gravitate to is not the application layer. I look at the foundational layer first. And what I'm excited by is things that transform a sector, transform our lives in particular ways. And it really is at systems level. And I'm always looking at it from this lens of how do you build something sustainable and durable in those areas for the future that brings great value and changes people's lives for the better. So to me, that's always a central theme, whether it's healthcare, whether it's finance, whatever we're working on now today, fast forward into our journey as VCs, is really looking at it from that lens. It's really looking at, and this is where Jordan's work and background and my work and background, I'm a serial entrepreneur as well. And I've always looked at things that are defining the future in really substantial ways. And the way that Jordan and I have been able to combine our rather different journeys and backgrounds, but with this common lens of solving foundational problems, sounding systems level problems, architecture level problems, which to us is something very interesting and challenging and therefore exciting. One other little point that I'll mention is at a Bryn Mawr, when you're selected to attend Bryn Mawr, you're selected for one major reason, which is insatiable intellectual curiosity. And I'll tell you, that is actually, in hindsight, a great, trait to have when you're a VC. Because as a VC, you really have to think above a single problem and you're starting to think across problem sets. You're starting to think about systems as a whole. You're starting to think about a whole aggregate set of things. And that's really what a thesis driven VC fund is all about. And for us, it's very much a thesis driven kind of VC fund that we're building. We published our thesis in our book. That's another thing that Jordan and I have been able to collaborate on very successfully. And it really puts our vision and our stamp about what we're expecting to see in the future. So when you start combining, albeit different backgrounds and different perspectives and different lens, but then bringing it into this common vision and common purpose of saying, how are we going to be able to enable systems for the future, positive systems for the future, impactful systems for the future? And that's across healthcare or finance. And as we say, high stakes industries where failure is not an option. Mistakes are not an option. These are 0-day sort of requirements that we think about. And those are the kinds of things, very challenging things that we expect founders who are really great at what they do, who are passionate about solving for these foundational issues to come together. And this is kind of what the full circle is all about, is now in this next chapter of our career paths that we're embarking on together, Jordan and I have this very exciting opportunity to partner with founders who are also excited and passionate and very deep on solving some very, very important systemic challenges. And that's something we're very excited about.
Yeah, and this is really, really crucial. Like what Jordan and Radhika says is that the first principles thinking of the scientific approach, right? The scientific focus with this systems thinking is actually like something that like major companies, even like no matter small or big, and we're talking about like Google, those big companies as well, they kind of just like disregard. And then once they do that, that's what happens where it just starts to fall apart. And that's why this is just so crucial. And I'm so glad that you guys have such a solid basis on that. Yeah, that definitely reminds me of one of the previous guesses. I don't know if you know him, but Costas. And yeah, talk about like how were you guys able to launch the fund? And I know this was years back, but how were you guys able to do it? And when did you guys like even meet each other, right? Like, and started this whole journey of like this amazing vibe. And it's like, how can these people be like so close and just like vibe like that? So tell me about the origin story.
Sure.
There's a commonality as well that Jorden sort of touched on in his background, and definitely part of my background, which is the global background. So I'm originally from India. I grew up in Morocco, in North Africa, and then ended up here, as I mentioned. And, for me, the global stage has always been what feels like home to me is the global stage. I'm very multilingual as well, about 12 languages. So it's something that I'm very comfortable with. And so when you have a mindset that really spans sort of that globe, I mean, one of the things Jordan and I really enjoy is diverse perspectives. We are firm believers that diversity is our biggest strength. And part of that thinking also means that you play in certain circles. A decade plus ago when we actually met through a pan-European networking event. And we were introduced by one of the organizers of that event saying, hey, you ought to meet somebody that you might really actually sync with. And we didn't know what to expect at that time. And actually, when I first met Jordan, I thought, oh, I don't know, foe or is he a friend or a foe? I don't know, because might be a competitor, in what I was doing, because we were working in this cross-border space and working largely with companies coming from outside the United States who were trying to enter the US market. We've been ecosystem builders along the way. And so I thought, I don't know, is this going to be something that works or not? You don't know. We started working on a few projects, after we had met through another friend of ours, and it just kept building. Every project that we did together reinforced that diversity was really great, that we had these different sort of backgrounds and viewpoints, but at the same time had a common vision on how something ought to be pursued. It's a very similar critical thinking approach. It's the desire to be very thorough, and excellence was always part of this. And so this kind of shared vibe that you talk about is really about shared values, Joe. I mean, when you think about values driving something, the best people are ones who can create value. And so our journey has always been, prior to our fund, when we've had our venture lab, it was always about value creation. And it was always about embarking on a road with founders, creating that value with them and co-creating value. And so, this is part of our journey, how we met and, how we got introduced, and then how we ended up working on different projects together. But those are some of those standout points for me. It's the shared value system that I think creates the vibe that you feel, and the synchronicity of what you feel comes from that shared value system.
Yeah, and maybe just adding a little bit to what Radhika was saying there. Some of the first projects we started working on were actually for accelerators. And so the accelerator is like working with a whole bunch of companies and you're raising a fund. And so one of the first projects was really that, right? And then we had other projects that were not just here, because that was a project here in the US with a friend of mine at the time with his company, and looking at accelerating different technology companies. But then we started looking globally as well, because we have this shared global background. And so we were working with acceleration programs that were in South America, that were in Europe, that were in Asia. And so we were constantly working with different ecosystems. Again, this diversity idea of people from all over the world that have different ideas about how technology should be built. They had different problems in their societies that they, were finding solutions for. And we started to see and map, different areas, and realize that certain areas we gravitated towards. And most everything that we were working on just from the very beginning was focused on AI. So AI was a really big part of it. Both Radhika and I had used AI in our companies that we had built. And so at that time, it was mostly predictive AI. So it wasn't yet Gen AI, but it was predictive AI. In some cases, like in my first company, it was actually the earlier generation of generative AI because we were doing a lot of stuff with text, right? So I kind of had this early view of Gen AI from like 20 years ago. But the most of the stuff after that was predictive AI, and it was in many different areas. It was from, working with agriculture to healthcare to finance. And then, when we discovered blockchain in 2017, from an enterprise standpoint, we started to combine blockchain and AI. And because we were working with like cohorts and groups of companies, that was something that kind of got us into this idea of building a venture lab. And so we built a venture lab to test out the technologies, to work with groups of companies, to start our own communities and start our own companies built on the technology. And we did that primarily in, again, the same areas. So like healthcare, finance, supply chain. And then we ended up over the last decade working with around 25 different companies, investing in some of them, but advising all of them to some extent. And in those cases of the 25, there were 5 that ended up doing something interesting. So 3 had exits. There was 1 IPO. There were 2, acquisitions that were greater than $100 million. And they were all in some form of, enterprise that was applying AI and data intelligence, and they were able to build a lot of value. So it might have been in, marketing, or maybe it was in retail, or maybe it was in tools for software development and QA. And then and then there were the 2 unicorns. And Radhika, do you want to talk about the 2 unicorns?
Yeah, I just say that, we were really happy that part of our success story did include these 2 unicorns, both of which are in healthcare. One of them is one of the largest unicorns in healthcare out of Europe in remote patient monitoring, which is a really big area now. And it was a big area then. It's even bigger now. But then the other one was in the area of wellness. And it was really a supply chain company, but it was focused on wellness and the corporate environment. And that actually, the CEO of that company, who we had advised, is actually his second company is our first investment as StarChain Ventures as a fund. So, there's a story that keeps building on this, because again, back to the whole story of what brings us together, it's about people at the end of the day. It's about relationships. It's about relationships with founders, and now relationships with founders and LPs. And so this fabric of human relationships really kind of envelops everything that we're doing. It is at the heart of what we're doing. And so for us, having these relationships that kind of have withstood the test of time, so to speak, and now we're just keeping the conversation going, keeping the chapters now getting written in new ways. That's exciting for us, because it's always about technology, but fundamentally it's about people and relationships. And so, having these successes in healthcare and in AI data intelligence in general, that's really become a cornerstone of our thesis. And our vision of what these foundational technologies and what they bring in decades into people's lives is really underpinned by this whole human story. So I think that that's something that, I wanted to bring out, is as much as we've had all of this success with the companies, we've had successes because it's always been about exceptional founders and adding and creating value with these exceptional founders. And the journey that we are on is enabling now for them to do new stories, new chapters, new companies that are equally going to be very exciting.
And just one last point, which is just to quantify it a bit, is that we work with companies, there's 25, we help them raise about 250 million directly. And then through follow-on investments, it was over 900 million. So it was quite a lot of, success in that group. And then they generated about 4 billion in value, which was 2 billion from the acquisitions and the IPO, and then another 2 billion from the unicorn. So that's what led to the 4 billion plus in value. And so we saw that we had the ability to pick winners that were at venture scale. And then we were kind of looking for a catalyst. We can talk more about that, but we're looking for catalysts to actually move into venture capital directly.
Yeah. And this is a power of you guys' synergy, right? Is that every single project that you guys work on together, it basically helped you guys each grow exponentially more than, if you could have just like done it alone. And, I mean, I personally is like so thankful for whoever literally just like introduce you guys because that's where this all started, right? So I guess like talk about, I remember you said like all those companies, right? Were they all from the venture lab that you created, or is that like
And not entirely through the venture lab. Some yes, but some not. I would say that, we had a period of time where we were working through a boutique consultancy that was really focused on this cross border, working with companies coming into the United States, et cetera. And then we kind of got into the next phase of our team journey, which was to create this venture lab because we were seeing at the time the opportunities in blockchain and AI, and we were looking at the convergence of those technologies. And so we thought a venture lab would be great because again, it was the next chapter in the journey of working in ecosystem fashion with these companies across the globe. But then we did the venture fund. Now we launched the venture fund last year. So it's kind of been a progression, from a boutique consultancy to venture lab to venture fund. And that's really been kind of the arc that we've been following. But this is the most exciting part of the arc. It's just like the beginning of a brand new wave that we're riding. And, for us, the venture lab was kind of a instrumental part of the journey where we were able to do value creation in a brand new way. So it wasn't just advising companies. Some of it was investing in companies. Some of it was launching our own initiatives and our own projects and companies. And all of these multiple facets of the venture lab allowed us, I think, to explore the most exciting aspects of the convergence of technology. That's really what we've been about, and that's where our focus has been. And the co-creative aspect of the venture lab, I think, permitted us to explore this to the fullest extent. And that's, then we saw, okay, there's a pattern here. There's a real story here, and it's building. And obviously the next step is going to be the venture fund, right? That's
Yeah.
really
And we actually thought about doing VC like upfront. So when we did StarChain Ventures as a venture lab, we thought about doing VC. The issue we had upfront was really two things. One, we didn't really find a lot of companies that were at the intersection of AI and blockchain. Right. So that was one thing. So if you go back 8 years, AI and blockchain was just not a thing. We were kind of ahead. So we were looking at that intersection. We wrote about that intersection in our book. And we're really seeing it happening today, which is why we were really looking. I mean, the thing that we saw a couple things that really made us want to jump in now. At 8 years ago, and at different 2 or 3 times, we were looking at doing a venture fund while we were running the venture lab. It either was, we didn't find enough companies, or if we did find companies, we didn't really find supportive LPs, right? So in blockchain, it's often been crypto and not enterprise blockchain. And then in AI, what we found is that people really didn't have a good grasp of what AI could do, right? And so they didn't really understand what we were looking at. Because again, we were focused on enterprise AI, and which is more of a new thing, right? It wasn't like, kind of chat GPT and stuff like that, which really is an enterprise. So it was really a timing thing. And so there were really a couple things that came together. One was Databricks. Databricks, like you might know, is an enterprise AI system that allows enterprises to build frameworks and agentic structures that are really enterprise grade to help them with their workflows and to help them do their businesses more efficiently and better because they're using AI. So what happened in late 2024 was that Databricks ended up raising $10 billion at a $60 billion valuation. And today, it's the fifth most valuable company startup at 135 billion, 134 billion. So we saw it when they were just hitting 60, and we thought, okay, enterprise AI and data intelligence, because they're really a data intelligence factory, is really what, they're very, very much a platform and a framework for building data intelligence inside your organization. So that was really very important. And then the second thing is that we saw that there was going to be a shift in the blockchain and crypto space with regards to the US. And so that's really what we needed to see. We needed to see that both enterprise blockchain and enterprise AI were going to get switched on at the same time. And then there was going to be this massive explosion of opportunity.
The last piece of it too, which a lot of people haven't really been paying that much attention, but it's a very important catalyst, is policy. I was part of the blockchain working group, which is a task force that was really designed to advise Governor Gavin Newsom of California and California state legislature on the Web3 as a technology, blockchain as a technology, and really explore the applications and implications for the state of California. And as a result of that effort as a task force, our work was basically the catalyst for new law that got passed in California that gives all Californians the right to have vital records on the blockchain and many other instances. And so we really created the roadmap of what a foundational technology could mean for the benefit of 40 million residents in California, which is a pretty large implication. And when you look at that, and this is again, part of what we wrote in the book, is that a lot of elements have to come together in a perfect storm to be able to produce the right timing for something. Everybody talks about the timing for something. One of the things that we saw was that unless you have regulatory clarity developing around a foundational technology, unless you have policy that's written that is supportive of this technology adoption, and then institutions and enterprises begin adopting these technologies, there's still this wild, wild west sort of land still. Things are just loosey-goosey. Things are not as clear. Things are not as precise. Things are not as visible. And therefore, that uncertainty creates two things. One is either hype, which is FOMO, or FUD, either one or the other. It's very polarizing. Once you have regulatory clarity, once you have clarity around policy, once you have clarity around institutions and enterprises and start stepping in and saying, we endorse this, we adopt this because there is a foundational need for this technology. When those kinds of things, indicators start happening, AKA right about now, is when all these things are happening, which is what we predicted in our vision, in our book. But when these kinds of things start happening, this perfect storm starts creating the environment for something to just break out of this hype or FUD sort of moment, and then instead catapults it into a brand new phase of adoption. Mainstream recognition, mainstream acceptance, mainstream adoption. And when that happens, you've got some remarkable spikes going up in opportunities. And that's kind of what we had predicted is when enterprise starts endorsing this and adopting these technologies, now is the moment to look at where the opportunities for startups are, because now they can ride this crest that is now building. So these are the moments that we've always kind of anticipated. What's exciting is that they're all coming together. And so the window of opportunity for us to launch this particular fund with this particular thesis has been since last year and obviously this year, and it's building into a beautiful wave now.
And that's how you really paved the way for remarkable companies like Databricks, right? And that is the goal of basically all the VCs. The returns are really going to go to that small percentage. And it seems like you guys are able to really just see that vision really far ahead. It seems like, so you have this boutique consultancy, you have this venture lab, and then you do these venture investments. I'm curious because talk a little more about like the consultancy. Does the founders come to you because of the regulations help? Do they come to you because like they say like, okay, are these like technology actually needed? Talk more about that and maybe even go into the book as well.
Yeah. So, we have a pretty strong technical foundation, being technical founders and building software and then working with, global 2000 companies in terms of helping them to build out their infrastructure. And so many times what we would do, especially because we had the venture lab, is we would test a lot of the tech, right? Just make sure that it works. And sometimes there's a lot of, like, you look at it today, everybody's saying, oh, we're on the cusp of AGI. Well, we really aren't, but, or like these models are thinking and they're reasoning. There's just a lot of stuff out there. Even when you use them, they say thinking or I'm reasoning, right? So there's a lot of marketing about them doing things that they aren't necessarily doing. So it's easy for people to get confused and, or self-driving cars, or they're self-driving to a certain extent, but maybe not always and all the time. So I think you have to test it out and understand, where are the strengths, where are the weaknesses, and, where can you actually apply this? And even if it works, can it work in like compliant in a compliant way with regulations and all this kind of thing. So we have a very good foundation in all those things because of the work that we were doing. And so when we would meet with founders, we kind of had a co-creation model. So let's say that we see some really good founders. They have a certain level of expertise, but we have a certain level of expertise too. And so the idea was we could work together with them to create a better company, right? A company, maybe that means kind of changing up the way, the product is architected or the technology stack that it uses, and then maybe a slightly different use case or set of use cases because they have a bigger market opportunity. But then, the founders have other skills, right? Maybe they're able to build the technology, right? So we're helping them to architect it, but they're building it. They have access to the resources. Maybe they have very specific capabilities and that are needed in this particular area. Maybe they have network, right? So it allows them to get into particular types of customers. So it really became co-creation. Then, and then it's a lot of chemistry. So going back to Radhika's point about the people. So when, for example, we were working with Michael Heinrich in his first company, we started working with him in the area of the technology, and then it was technology and business, and then it became a bit more technical, and then it became a bit more business oriented. And, it ended up going months and months and months. And we built the reason that it was able to extend was because we had a very good working relationship. We respected each other's areas of expertise, and we were getting value, right, on both sides from it. And then that turned into a friendship, which led to our having this close relationship so that we ended up investing in his company last year, right? His second company, like Radhika mentioned. So it's really about building those relationships around value creation and expertise that we have, and then that kind of mutual respect and the ability to work together.
I'll just add this because I think you hit it right on the nail, but I'll just say this too. What started on the boutique consultancy side and then developed into the venture lab co-creation side of things. And now as a venture fund, I mean, we still have founders come up and tell us all the time and say, we've never talked to investors who understand the technology in the greatest degree of depth like you do. We don't get investors who talk about this or that. And we really are able to peel back the onion layers of what they're building and understand at the most foundational levels how something is constructed. And that's something that I think is our secret sauce. I think that, many people might be able to do different things and add value in different ways. The ways we've always been able to add value is on the strategic side. So it's not technology for technology's sake. It's not business for business sake. It's really bringing the most amazing powerhouse combination of technologies in a new enterprise stack that is creating this durable value for business. That's really our lens, period. But our ability to see through all of that and, if necessary, deconstruct, reconstruct, it's something that we do by natural instinct. So I think that that's a bit of our secret sauce and founders today. So where people would come to us for more advisory, boutique consultancy kind of engagements or venture lab co-creation engagements is now on the venture fund side of things. People come to us as VCs and saying, what will it take for you to invest in us? Because we don't meet investors who are able to look at it in the lens that you're bringing to the table. And it's very valuable to have for us to be able to have that. So it's no longer the discussion about how much money are you going to put in. It's about the value we're bringing to the table. That's really, when I think about, well, as a fund manager, here we are at Fund One, and we're planning a whole family of funds around this thesis, broadening it and deepening it as we go further into future funds. But really, at the end of the day, it's about that. It's about creating value all the time, right? And so something we've done as second nature and something that's come so naturally to us and has been a very big part of our success story till this point is now going to be taken further into how we continue to add value into founders and how they're building companies and really helping them create the best of their best. And so nothing's really changed, but now we're just adding money too as well to the pot, right? So it's money as well as a part of the equation. And we're building this portfolio of really high performing companies with founders that are really bold and execute beautifully and have this desire to take on systemic challenges to challenge the status quo of thinking, to build something differently because they bring a very diverse lens to what they're building.
Yeah. And so all of these founders and companies that come to you, are they usually global? Like, are they just like in the US? What parts of the world are they coming from?
We have worked really globally. So we have networks that are global, and they could be, in Asia, they could be in South America, they could be, in Africa
Okay.
now. We have companies that we've invested in that have operations in Africa, and then, obviously in Europe as well. So we like founders from all over the world because we've worked with them in the past. We've had very good working relationships. We typically understand the culture. The thing that we look for is that in Silicon Valley, it's about really thinking big, right? It's about thinking a lot bigger. It's about faster execution. And so we look for founders that are adaptable to this kind of Silicon Valley way of building businesses, because if they don't have that, then they can't really adapt to what the venture model is right here in Silicon Valley. But yeah, we get a lot of incoming from many sources, from different parts of our network, from LinkedIn, but mostly from trusted people, right? Again, it's relationships that drives most of it.
I'll add to that, and I'll just say that we like global founders. We do believe that that diverse opinion, that lens, it really helps look at problem solving in a totally different way. And that diversity of lens is so important when you think about what innovation truly is. If all of us saw the world the same way, and we all saw the problems in the same way and the same solutions in the same way, that's pretty boring. And actually, you're going to end up with a very, very narrow set of solutions to really big problems. So the way that we can tackle big problems globally is when we have global mindsets, when we have global lenses, when we have global perspectives, global lived experiences that shape your thinking in a particular way because of that lived experience. It makes you catch the things that maybe other people might not see, right? And that's the whole purpose of diversity. From a venture fund standpoint, from a charter standpoint, if you will, they have to be US domiciled. So a fund one is really about US domiciled companies. And what we say is this, and this has always been part of our success story. Back when we were working with companies that were trying to scale globally and come into the US market, they came here because the US has an amazing market to enter. It's a huge economy, and it's a very attractive economy for people coming from many other countries where the market might be really limited. And so the US is a great market to come into and play in. And what we've always said to founders is, if the US is where your biggest customer base in, it makes a whole lot of sense for you to be based here. But that doesn't mean you can't draw from the strengths from your home countries and have your development teams be built, coming out of there, and also do things locally and globally there. So we're very open when it comes to where these companies are operating, but we do ask for Fund One that the companies are US domiciled.
Yeah, and to make it concrete, our last investment was into a founder and a team that we've known for over a decade across multiple companies. But the CEO, his name is Moses, he's originally from Kenya in East Africa, and they actually developed the technology through a combination of both the US and Africa. So they took the initial technology from their second company, but then they modified it pretty heavily for the Africa market. And then once it became, they built a neobank that was very successful for what they were doing in Africa. And then they had friends who are now part of the team over here in the US who said, what you built over in Africa is really useful in the US as well. And they said, really? And we didn't realize that. And they said, okay, we'll try it. And then they were able to close millions of dollars in business. And once they were able to do that, we were like, okay. But it was the insights that they had from the African market that enabled them. A lot of people don't know that in the financial services area and in finance in general, and just in terms of like mobile payments, Kenya is probably the leading location in the world. It's even beyond the US and China. China is a little bit ahead of the US, right, in terms of mobile payments, but Kenya is even further ahead in some regards. You have a market that is been using mobile payments for 2 decades, right? They've got a long history of it, and they've built really interesting solutions for problems that actually exist here in the US. And because they have this out of the box thinking that was really relevant to where they were, and it's people here just couldn't really come up with it. So it's funny because we mention, lending and the way they do it in the US, and a lot of people say, "Oh yeah, people have tried that, but they weren't successful." And it's like, well, because they didn't have the right approach.
Exactly.
And they're like, "Well, how's this company doing?" And we explain it, and they're like, "Wow, they're doing so much better than all the other companies that we had looked at." So now there's a lot of people who are excited and they're looking at it. So that's the thing is you can find, like Radhika said, because there's diverse environments and diverse teams, and they're solving different problems in different countries. Sometimes that technology is actually we've always heard of, you take U.S. technology and you localize it and make it available to the rest of the world. But there are also instances where you take stuff that works in other parts of the world, you bring it back to the US, and then, you can be the front runner in the market.
Yeah, it sounds like, you guys really, really understand this perspective of how globally everything can kind of just come together. Just like how if you take knowledge from two different industries and you combine it, you create something new, you create something that is possibly more advanced, possibly better for everyone else. And I'm curious, so what are your requirements to invest in a company? Like,
Mm.
talk about the structure. Do you guys like invest in 3 weeks? Do you guys invest in a month, 2 months after the first meeting usually? And then also like, do they have to be in the venture lab? Do they have to go through it for you to invest in them?
So the answer is, so first of all, we like seed stage companies. I think we've worked with pre-seed and seed and even beyond that. But for us, our sweet spot is seed. So we like a 500K roughly ARR is about the time that we think it's an appropriate time for us to engage with a founder. It has enough proof points around the technology, around the market, around product market fit. And so we look as that as one of the indicators. It can be sometimes a little earlier than that, but again, it depends kind of a conversation based on, what market they're in, what type of company they are, etc. In terms of time taken, I think it just also, and it depends because, sometimes we can be much quicker at making a decision to do something, particularly if it's a founder we've known for a very long time. I would say that the process can move a lot faster because we have a lot of proof points around trusted relationships. We've worked with that founder before, et cetera. We've known them for a long time. So that process can potentially move quicker. If it's coming through a trusted, partner, that also can accelerate the process. And if it's somebody we're meeting for the brand new for the first time, it might take a little time or may not. And it depends because we don't look at any one thing, right? Team, market, product, usually in that order. We look for exceptional founding teams, stellar founding teams to continue the star theme that we have. Stellar founders, stellar teams that are transforming high stakes industries like finance. For Jorden, he's leading the investments on the finance side. I lead the investments on the healthcare side. So in both of these are high stakes industries, and we're looking for markets that are trillions of dollars of opportunity, growing markets that are fast, expanding. And then the product is usually based on an innovative stack. So it's AI and blockchain is really kind of the intersection that we love to focus on. But AI data intelligence is really what we're very, very focused on. And we look for founders that have the wherewithal with those particular areas that are going to create things transformatively. In terms of a fund, I mean, we have also a range that we invest in. Jorden, you might want to elaborate on that, but this is typically a profile we're looking for.
Yeah. I'll just add one more thing before we talk about the range, which is that we do take a little bit longer to come to a decision because we are high conviction founder first. And so to Radhika's point, team is most important for us. And so, we've looked at some YC deals. With YC, you have like 72 hours or less to make a decision. We find that really difficult because it's hard for us to build conviction. We don't build conviction because other people are coming into it. We have to really understand the technology stack. We have to understand the conviction that the founder has in their business and why they think that this is going to win. Why are they going to win? So we have to do pretty heavy due diligence. And so that's why, if you're more of like someone who's going to kind of follow the trends and do like, oh, I'm going to do 60 or 100 investments and I'm just going to throw money around, and it's more of like a spray and pray model. That is something that people do, and it does have a certain amount of success, right? Just based on probability and maybe getting into good networks. But that's just not our style. Our style is we've got to understand the technology. We've got to understand, can this technology stack, does it have a moat? How big is the moat? How defensible is the technology? What's the upside? We're not looking for something that just goes to unicorn. We like to see something that could go to multiple unicorn or decacorn, right? And so because we're really looking for outsized returns for the fund, and it's all possible in data intelligence. There's a lot of 1000x, 2000x kinds of, major players out there like Databricks and others in this space. And so, the opportunities are there, but you have to be able to really find them, and that takes a bit of time. And so that's why the process. Now, if we have really high conviction, then we'll lead, right? So even though we're a fund one, we will lead. And a lot of fund ones don't lead because they just, number one, they may not have the experience, but because we did a lot of kind of lead oriented stuff when we were, a venture lab and before, we feel confident that we can lead. Second is our process is the due diligence level that you need when you're leading is much higher than when you're following, right? If somebody's already saying, oh, I've done all the due diligence and now throw in some money, right? They've done all the heavy lifting, right? Maybe you check some things out. You want to make sure you read everything that they've done, but it's not original, right? They've done 90% of it, and you're kind of saying, this looks exciting and I'm coming in. Not that there's anything wrong with that. That can be really good for a fund one, and you can get into really good opportunities. But, if we really have high conviction, we'd like to be in that lead position. We'd like to be able to work with the team. And that's something else. If we benchmarked off of the best fund ones. And the best fund ones, they don't have like 5x returns or 10x returns or even 50x returns. They have like 80x returns or 200x returns, right? And we really looked at what did they do. And what they did is they took their time, right? They really got in, they understood the team, but they most importantly is they added value, and they were very disciplined in saying, if I cannot add value to this opportunity, I'm not going to come into it. So even if we're going to follow, we have to feel that we can add value to the opportunity. And not just us, with our fund, which has some kind of elements of like an operator collective, we want our LPs, if they're interested, to also have the opportunity to work with the startups or advise the startups. And so we actually bring a whole group of people, not just ourselves, because, maybe it's sales and marketing, right? Maybe it's, business development, maybe it's HR, that's not really our strength. There's certain aspects of marketing, but sales is a very difficult area. You have to have a lot of, expertise, same with business development. So these are areas that we would like to have more. And then there's particular technology areas as well that people can be very good in. So if it's, a very strong opportunity and we can lead, we could go, up to 500,000, right, in a lead position. If we are following, we can start maybe at like 100K and go up from there to maybe 250. So I think, it depends, like, what's the situation? What's our conviction level? Are we leading? Are we following? How well do we know the team? Where are they? Are they pre-seed? Are they seed? So there's a bunch of, but between that 100 to 500 range is what we can put in, but it's variable based on these specific factors.
Yeah. And, all of this really just goes to show that if a founder wants an investment and they truly want like the investors to give them value, then they should literally just like come to you guys, because it sounds like, people can kind of just like invest, like if they just want the money, like that's okay. But then you guys actually need to truly understand that product to actually add value. And when you add value to all those founders, it helps them really just accelerates and exponential their entire startup. So talk about like maybe one or two startups that you guys have invested in so far and was successful?
Yeah, ones in the past or ones now or both?
Like so far, just at any time in your life.
Yeah. Do you want me to start out, Radhika?
Sure. I mean, I think,
Yeah.
Isoko is probably a really great
Yeah,
example
I think,
of what
yeah.
we're doing. Yeah.
So one of the companies that we started investing in is this company called Pesoko, and we didn't just invest in this company. This is the team that's out of Africa originally, in terms of the founder.
Well,
But we
back.
met him. We met him here in the U.S. and with like two companies prior. And when I met Moses and his team at the time, 10 plus years ago, there was something about him, right? So there's always something that you can see with a founder that there's some capabilities. And he was a pioneer in point of sale systems and was actually um, had deployed and coded the first mobile point of sale systems in the US for the hospitality industry. And I met him actually in Las Vegas. And in Las Vegas, you're buying a lot of stuff, right? You're going to restaurants, you're going to clubs, you're going here and there. And he's like, "Oh yeah, I put that system in. Oh yeah, that system that you're using right now, I put that in." It's like everywhere you go, it's like he's the one who pioneered a lot of this stuff, right? And there's a lot of proof, right, that he's done all of these things. And so he really understood finance, he understood point of sale, and he understood, big money, right? All that type of thing that goes on in Vegas. So we ended up working together, and he had a certain amount of success in the second company. And then, he was thinking that there were big opportunities in Africa. So Radhika and I worked with him to spin out this current company, which is called Pesoko from the second company. And this one has really taken off, and that's why we ended up wanting and actually not just investing but leading the round. So that's when you have these good experiences with a founder and you see them creating certain levels of success and they have these accomplishments and they're able to have other people who are successful work with them, and there's like whole other stories we could tell you about that, like who's on his team, and they're actually pretty successful people that are older than he is, and he's able to attract them from really high paying jobs to go and work with him in his startup. So there's all these kinds of elements that you see, is that there's this charisma, there's this vision, there's this culture, there's this drive, and then there's the ability to execute. And so that kind of package is really what creates great CEO founders. And then people get behind them.
I'll add one thing, which is, people talk about investment and returns. Frankly, Zhuo, it's actually two things that are really important for us. Number one, it's exceptional returns. As obviously we're here. This is not a charity kind of enterprise. Everybody's here to make money and win big. We're all for that. But it's also impact at scale. And so our whole ethos and our whole operating mantra is profit with purpose. We're all about maximizing profit and also maximizing purpose. So with a company like Pesoko, the kind of work that they're doing, reshaping, really reinventing financial rails for financial institutions, right? Bringing financial data intelligence to be able to amplify the work that they're doing in terms of improving access to credit, access to loans for small to medium sized businesses across the United States and of course also in Africa. This is impact at scale, and it's driven through a group of people. Of course, we have the strongest relationship with the CEO and founder, but it's the entire founding team that is bringing together just unsurpassed experience levels in their backgrounds and bringing it together in a unique fashion that really reinvigorates this whole space and reimagines this whole space. And when you think about who's able to benefit from this, that's impact at scale, because it's small to medium sized businesses that don't often have access to this capital, that are outside traditional financial ecosystems, even when it comes to working in Africa, for example. And all of this to benefit people that are completely outside the banking sphere altogether. So in Africa, their highest impact is with unbanked women entrepreneurs and business owners. That's an amazing accomplishment. And the work in Africa is also backed by a grant from the Gates Foundation. So this is about being involved in a global effort that has impact at scale at its heart. So for us, just as much as it is about exceptional returns, which we're all about, we're also about exceptional impact. And so I
Yeah.
think this is an iconic company for us in the sense that it's delivering value on both sides, both on returns as well as on impact.
Yeah, and just to add one thing in terms of the other company that we had mentioned earlier, which is Zero G with Michael Heinrich. We had mentioned that his first company he raised over 100 million. The company he generated over 100 million in revenue. It became a unicorn, and then he sold it. But then the second company, that company we were very excited to get into. He had a pre-seed round, which ended up being about $350 million, which made them a pre-seed unicorn. And we ended up being able to get into a closed round, which was great. But the opportunity there was that he was going to build another unicorn, and they did launch last year, and they were kind of a mega unicorn when they launched in September. So I think that's another example of unicorn founders who, and in both cases, they're repeat founders. We like that repeat. The profit with purpose aspect of Michael, and we worked with him very closely, and he's very aligned in terms of creating positivity and value at scale. With his current company, which is called Zero G Labs, they're very focused on safe AI, safe, compliant, private AI that benefits the world and actually reduces the cost for access so that pretty much anybody can create their own models. Right now, it can cost 10 to 100 million to create models. But say you could make those models for a small fraction, like say 95% less, 10 times faster, and then you could operate them at 70 to 80% cheaper, but they would have the same kind of quality, or if not better, and they would be aligned, they would be safe, and they wouldn't compromise your organization. So these are the types of founders and the types of capabilities that we are looking for that really both provide high returns, like Radhika said, and then also provide societal level value as they scale.
I love the way Michael Heinrich talks about what he's building, and with such passion and purpose. He often talks about, who is going to win the race. And the race is not going to be won by the largest models. It's going to be won by the models that produce the highest amount of trust. So trust is really the goal that you're after. And this is a really essential part for enterprise. And this is why we're so excited about what he and his team are building. And he talks about a new substrate for intelligence. I love the way he phrases that, because this is not just about the here and now and about even just enterprise. It's going beyond enterprise. It is really going into new rails for humanity. And that's really what I told him in response, because I think that, we really like that kind of bold thinking and bold vision. It takes a particular type of founder who can take a vision to its furthest extent and then has the wherewithal to go and tackle it and execute time and time again, to deliver that value time and time again, and to deliver on the fullest promise of what that vision holds. That's a quality we really look for in a founder. And this is hopefully something as people are looking and listening to our podcast, that people are inspired by this and to be willing to tackle something as big and as lofty as that, but then be grounded with how they're going to execute to plan. So obviously it is not just about a theoretical exercise. It is about something that has a really grand vision, but can be absolutely executed today in the most tangible way.
Yeah. And it's really about having just so much clarity on exactly what they're doing, that they are really going to reach that purpose. I know you mentioned like these two examples as repeat founders. So do you guys only invest in repeat founders, or do you guys also invest in new founders?
Leaning towards repeat founders, right? I mean, we were repeat founders ourselves. And we just know that when you are going through it the first time, there's just a lot of stuff that you have to learn pretty quickly. It doesn't mean that we aren't going to invest in first time founders. We do look at first time founders It's just that when you are a multi-time founder yourself and then you meet other multi-time founders, you already see a level of maturity, right? They already know kind of where the bumps in the road are. They know where there's going to be problems. And that doesn't mean that, first-time founders can't be successful. There's plenty of, very well-known first-time founders who are, some of the wealthiest people in the world. But, the thing is that with our fund one, we really want to optimize the potential. And these very high performing first time founders, they're hard to find. It's hard to know. So that's the thing, is if they're more proven, it's easier for us to feel confident that they're going to be able to execute because they know what they need to do. But we do look at a lot of high performing founders, but to date, we've only invested in repeat founders so far.
I will say this, because I think, we have to be really careful about buckets, right? I think that, the one bucket I think we can, both Jordan and I agree on, is proven. There are different ways to prove capabilities. So if it's not through being a repeat founder, show us how you can build conviction, or how we can build conviction around what else you've done in your life that is transferable. What's another set of proof points that you can actually demonstrate to show your capabilities to actually execute and deliver? And so I think, while our leniency is really, we're more lenient towards repeat founders because we're repeat founders. We recognize these patterns, like Jordan said. I would hate to put that as a be all and end all in terms of a bucket. I think that we like to engage with founders who have a good grasp of what they're doing. So let's say it's a founder who has an extraordinary amount of domain expertise in this sector that they're playing in, right? I mean, it really matters the level of expertise that you can bring to the table. And if there is a certain amount of proven expertise that you can demonstrate and point to and saying, I was responsible in creating these things, that's a proof point. That is also something that we would consider. It's kind of like our journey into venture. I mean, we've come from our own unique backgrounds, and now we've been able to launch this venture fund. And our conviction around it being able to perform at the highest levels, it's not necessarily that we had a fund before, right? But it is about a body of work, a corpus, like Jordan likes to talk about, of work that has evidence and proof points around accomplishment, around the ability to execute, around the discernment that is valuable in what we're doing. So it is about bringing that as a proof point. So, the proof point could be, well, would somebody else invest in us because we've done it before?
I'll just add one thing to that, which is, when we were in the venture lab, we were like constantly learning a lot of stuff, right? Because it's different to be building your own companies and then be building with other people and then kind of investing and building, and and then having the venture lab and building out stuff based on technology and having multiple projects running at the same time. And so we were learning a lot of stuff. So if we kind of consider that to be kind of like our fund zero or like a fund one-ish kind of a thing, because when people meet us, they say, well, you're more like a fund two in the way you think about things. And so we feel, even though we weren't, technically a fund in having LPs and all kinds of things like that, because we were using our own money in the process, is we were learning a lot of the ropes, a lot of the things that you need to know to be a true venture fund. Did we learn everything? No, we're still learning things all the time, but we had prior experience. And so we'll look at that, right? If somebody has, built companies before, we're looking at, some level of understanding what the startup experience is about, because most startups end up failing because the founders don't really know what building a company is all about, right? And they kind of get in and they're like, wow, I didn't know anything about any of these things. And they just can't put their arms around it. They don't know how to scale out to all of those things and figure out how to hire and how to delegate and how to build culture and how to put in place systems. There's a lot that you have to learn to do. And yes, people can do it. They can do it, but it's just harder. And so, that's just what we have to take into account.
It seems like you guys are really able to maintain even like long distance relationships globally for over years and years. What does it actually look like? Does it mean like, okay, let me send an email like every single year or every single month to check in on you? Does it actually mean like, okay, let's just go to an event in a country every single year? Like, how on earth do you guys maintain these relationships with people and even LPs so then they can send you deals, they can help the founders that you truly want to?
I think, it comes back to that value question. I mean, I think that when you have human beings that have shared value sets, a working relationship is perhaps where it starts, but then it blossoms into something else because you're really working around shared value systems and shared value sets. And so when that's part of the equation, whether it's on the LP side or whether it's on the founder side, it comes down to core tenets that Jorden and I have stood behind, which is integrity. It's about excellence. It's about, being authentically ourselves. We're not posing as people. We are just who we are, and we share authentically, right? And our ability to create those relationships because we are who we are and we genuinely share the passion in what we're doing, and we're able to transcend a time limit. It's not about meeting somebody at a trade show and you say, oh, I'll see you next year at this trade show, or it's not about an email, or it's not about a birthday card, or it's not about any of those things. It's about a shared value system. And I think that the best human relationships, the ones that are the most durable, the ones that transcend time, are the ones where we have shared values, because that's at a whole other level. And it's nothing about a transaction. It's nothing about an email. It's nothing about anything. It's about seeing life through the similar lens, about wanting different things, but, knowing that it has to be accomplished in a particular way, or it's seeing the same end goal. So when it comes to systems changing kinds of things like safe AI or responsible use of technology, or, game changing financial systems to democratize access to capital, these are things that just move us. And I think move both sides, right? So LPs, for putting in their faith and trust and saying, here's my money, be a good fund manager for me. It's not just about high returns. It's about creating that impact at scale. So many of our LPs, when we've come out with posts on, highlighting Zero G or highlighting Pesoco, for example, will actually take it and repost and say, this is why I'm so proud to back StarChain Ventures. It's because it's a shared value system. We didn't ask them to do that, but they volunteered that because it was about something that transcended a transaction. It is about a shared value system that everybody can see and say, yep, I see the same thing and I'm excited about this.
Yeah, and just to build on what Radhika is saying, during the pandemic, when everybody was kind of at home, we ended up, as part of our venture lab, launching communities. The communities are big, right? Because they were global, they were with people all over the world, and we, had to come up with content. We had to engage with people on, kind of omni-channel, right? There's like through WhatsApp, through Zoom, through, we were on Discord for a while. We did stuff in email, right? So there's just a lot of different channels, Twitter, or X or whatever. So you end up, and then LinkedIn, obviously as well has become a very big channel for us. So like with our LPs, we also, in addition to values, we have this operator alignment. Many of our LPs are operators. And so we have that shared experience in terms of company building, in terms of working with startups, in terms of really understanding the startup trajectory and what it takes to build durable and, enduring companies. And so that really, with the values and the similar life experiences and the focus on new companies and founders, and that really binds us together. And then within our fund, we have WhatsApp channels so that we keep all of our, as well as newsletters and email and all this kind of thing, to keep everybody up to date. And so we are in our LP community, we're in conversations with LPs daily, right? So it's not like once a quarter or once a year at some annual meeting or something. No, we have like daily discussions with our LPs. And we're looking for people that want to work with our companies, like we had mentioned, we have this operator, collective kind of a concept. And so there's like, we might be at the same table with, the people with the
Sometimes
startups.
go to dinner with some of our LPs if they're around, and some of them are local to, the San Francisco Bay Area, and we love meeting up with them. And I think sharing, a meal or a drink or what have you, and talking about things. And again, this is about transparency. This is about authenticity. This is about lived values. This is about shared goals and vision. I think that's really ultimately the human side of the equation, isn't it? I mean, we can have all this grand technology, but let's not forget the human side of the equation. It's very human centric at the end of the day. And venture capital is a relationship business. It's about good relationships, hopefully, and where there's value felt on all sides. And I think the best magic happens when you have the right people in the room, whether it's managers and LPs or fund managers and founders, or put the three of them together. What you're creating is this perfect storm of human relationships. And when everybody can win on the value systems that you prize, then yes, people keep coming back to it. And this is the stuff that is not just in one channel, but it's omni-channel, as Jorden was saying.
Yeah. And some of our investors, some of our LPs have come because we were at a dinner and they were visited by another one of our LPs. And so we met
Yeah.
at dinner. So there's,
So,
and so which works very nicely, right? It's very intimate and, you get to really share
person.
and it's very personal. So I think those are, again, going back to Radhika's points about human values and human interaction, even though we're very much all about AI, we're still very human.
Yeah, and that's the thing is that, the first type of profile might be someone who you have a similar journey to. Maybe you've worked in some similar stuff, but the second can literally be like so casual where you guys could be just like vibing and having synergy with other people who has that like same intense intellectual curiosity is a word that I like to use, where you guys are just like, okay, I kind of just like want a community of people who think the way I do. People who can like connect the dots like really, really fast, but then at the same time have like the same values, right? And it really is just kind of a gathering of friends. So, I mean, you guys are amazing for aspiring VCs, right? Like, talk about who should start a fund and what are the best ways to do it as, maybe ex founder, operator. And give me like a theoretical, like from both of you. I want a theoretical 6-month plan. Month 1, 2, 3, 4, 5, 6.
Yeah. Well,
Uh,
did you want to talk about VC Lab?
Yeah, I mean, I think, for us, a big part of our success story has been VC Lab. We are the biggest fans. And we've not only come out as proud members of the Desal family, are really proud to keep giving back as well, mentoring future fund managers, because this is what it's about. It's about all of us having our unique gifts and talents and backgrounds and how we can add value to the systems that are going to be created for tomorrow. We all have a different idea of what that looks like. And it's a product of who we are. So, in terms of who should start, I think, find out what your secret sauce is, find out what makes you tick. What are you known for? What are you exceptional at? What do you gravitate to? Who are you? And think back on your successes. What has gone right? Why did it go right? How did it come together? What was that magic that was involved with it? And once you can really crystallize that part of the story, then it's about how it gets transferred into a VC sort of narrative. What we were able to do very well through VC Lab and through them guiding us through this process and mentoring us through this process and explaining and teaching us what this was all about, and that we learned very carefully, was about tapping into our own strengths, about tapping into our secret sauce, about finding the narrative we wanted to bring into the world of venture capital, and saying that it's the world that we are having such high conviction around is the one that we choose to portray, distribute, invite people to join us on this journey. And it's something that is uniquely us. So this is not about just anybody. Anybody can create this, but really be very clear about what your unique voice is and bring that into the narrative that you're creating a venture capital fund about. The rest is really relentless execution. It is not a walk in the park. You get up every day and, we often joke about this, but this is very true for first time fund managers, particularly, maybe even just emerging managers as a category. But it's about bringing your A game every day. There are good days, there are not so good days. And, I'm grateful to have the partnership with Jorden because we can remind one another of what staying the course means for us and how we're going to succeed really, really highly to the best of our expectations because we're on this course together. And it's about that shared partnership in this vision and this legacy we're building, right? So but it is that commitment and that day to day get up and go. And, you'll have conversations that go beautifully well, better than you could have imagined. And then you'll have others where you're just crushed and say, why didn't that work? Right. But then it's able to just deconstruct things and then reconstruct things for the next day, just keep executing. So it is a relentless journey. You are a founder of a VC fund. So it's very much of that founder mentality in many, many ways. So I just want to pause here because I know,
Yeah,
Jorden, you
no, and I would agree with everything, and that Radhika has said, and it's really very important for me to be able to be partnered with her. And I think it would be really hard to be a solo. I know that there are a lot of solos, but what I would say is in terms of that 1, 2, 3, 4, 5, 6 months, like Radhika said, take that first month and really think about your secret sauce. Think about what your thesis could be. Think about your track records. Think about, like, if you've been an investor, what did you invest in? If you've been a founder, what did you found? If you've done both, what were the successes? What were the things that you learned from? If you're an operator, if what are all the companies that you've worked with and what things did you learn? And so think about all that and then see if you can find another person, right, that you could build the fund with, right? Because yeah, there are solos, but I just know that there are so many times that I'm really grateful that we can talk, right? We have if you have a good time, there's somebody to talk to. If you have a bad time, there's somebody to talk to. If you're just like working on stuff, there's somebody to talk to, right? Who really gets you, who you can understand, who's there, on the same wavelength, right? And you've had this working relationship for a long time, and you just can really like be 1,000 times more productive, right, in everything that you're doing. And that is really very critical. So I would say, month 1, month 2, kind of focus on that. Then, get into VC Lab, spend the next 2, 3 months in VC Lab, close your fund by the end of it, right? And, then start investing. So that's what I would say, could look like it. So find, just go through that.
And I'll quote Adeo, just came out with a post on, rejecting a number of fund applicants or, as you go through this process in VC Lab, not everybody graduates. Let's face it, it's a very small percentage of funds that actually make it through the program, the entire program, because it is rather intense. That intensity is not just for the program. It's something you have to continue. It's on repeat. It's a rinse and repeat kind of mode. And you develop a rhythm of how you need to keep executing and bringing that A game. And yes, not everybody's going to make it, right? And it's not just the VC Lab program as I'm talking about. It is about relentless execution, and it is what we expect of our founders. So why not of ourselves? The focus on delivering excellence, the focus on relentlessly pursuing that vision with the high conviction that we have, that's a discipline and that's a rigor. So while there is the high euphoric moment of vision and conviction, it has to be backed up by hard work, by the hustle, by the showing up, by the repetitious cycle of things and just trying to optimize and improve every step of the way. What can we do better tomorrow? What can we do better 2 days from now, a week from now, a month from now? What are our goals? And really tracking to plan as much as possible. It's not a perfect journey, but it is something that really tests you for your relentless drive and execution every moment. So I'm grateful to have a partnership to support me in this journey because I definitely, I'm in admiration of people who can do it by themselves. I know that I'm hugely blessed because I have a partner that I can trust in this journey.
This was really wonderful, Joe. This has been really fun.
Yeah. And I'm so glad that we got to get over everything. And you guys have just such a great relationship where it's like you can play devil advocate like for each other. And I think that that's like the best part of it, right? Is that you guys are amazing, amazing partners.